We think this is the end game of what we envisioned for silver. If you recall, Andy, we've spoken about this quite a few times. Mm-hmm. This is what we saw as the silver squeeze you can buy into, which is really premised by a drain in London vaults, free-floating inventories of silver. We think that drain has now reached a level that is critically low, meaning that at the average pace of ETF inflows over the course of historical cutting cycles, there are probably less than 4 months remaining until the LBMA's entire free-floating inventory stockpile is depleted.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a little bit of a quieter Wednesday, I suppose you could say. Gold and silver prices are down today rather than up, which again, I think you could safely say after the last couple of days is just somewhat normal volatility. Amazing again that here we are looking at $60 down move in gold market as normal volatility, and I would like to hope that most of you watching out there are not panicked. You think about it, if we had seen gold down $60 back in 2016, it would have been like, what do we do? Either case, there it is. Futures down 57 to 37.58. So still in quite healthy territory. And silver, nice to see when silver can be down 50 cents and it's still trading above a $44 handle. And that is the futures as well. So let's see a little bit of a sell-off. I'm sure Wall Street or CNBC would describe it as profit-taking. Maybe there was some saber rattling going on, other fun stuff. And as you might imagine, the dollar index up 60 basis points on the day to 97.49. Still despite that move, it's still safe to say it's been getting clobbered since the Trump team came into town shortly after they made Stephen Myron their chairman of advisors of the Economic Council. And he, of course, wrote that, not obviously, if you haven't heard this, but he wrote a 41-page paper in November of 2024 talking about how to restructure the global trading system and talked a lot about the overvalued dollar, which is less overvalued now than when they came in. And I think you've heard me talk plenty about, or maybe you haven't, about how it does seem as if Myron's plan is being implemented. Had Michael McNair come on and discuss that. So anyway, today we see it's up 60 basis points. Although, let's get right into it because, I mean, we've been talking a lot about the banks, I guess often talking a lot about the banks. Yet one of the things that's really stood out to me in the last couple of days in particular is now 3 separate bank executives or former executives that have expressed in one manner or another, kind of like that, hey, Frank, we might have a problem here type of comment about what is going on in silver. One of those is Daniel Ghali, who you've heard me talk plenty about. And he was the one who wrote that report saying that at the current pace of which silver is going into the ETFs, we could be 7 months from a depletion of the LBMA inventories if we resort to the historical pace during a rate cutting cycle. We could be 4 months away, and Daniel's on Bloomberg. So let us take a quick listen. I'll make sure we got the share sound button checked, and then we can go ahead and get started with this one.
On gold, Andy.
Do you see yet more upside?
Yeah, well, look, Andy, this is what it looks like when the US dollar is at least partially losing its store of value function. I mean, what kind of a market?
Then I'll insert some comments. You can go to Bloomberg, Daniel Ghali, to hear this whole thing uninterrupted. I know this upsets some people, but I got something to say here that I think is worthwhile now that I'm done with my tangent. But I mean, it's interesting. Again, he's from TD Bank. He's not YouTube channel or alternative media talking about the US dollar losing its safe haven store of value status.
Losing its store of value function. I mean, what kind of a market context is there when the stock market is at an all-time high, The bond market has, at the very least, ended a bear market and perhaps resumed a new bull market. Credit markets are at their tights. Commodity prices are rallying. What kind of market context causes that? And in our view, the answer to that question is a big reserve currency devaluation. And we think that's exactly what we're seeing symptoms of today in gold markets.
A big reserve currency devaluation. I mean, obviously, we've been talking about that plenty here, although it's now some of the banks sound like they've been watching Arcadia Economics. Go figure that. I mean, again, it's not new, but when you hear, we've sat around here talking about when is the mainstream coming in, when do the banks start to pay attention? Well, check that one off the list and let us continue on here.
The last several decades have been characterized by the rest of the world recycling their U.S. dollar, their U.S. dollars back into U.S. assets, and that's really the key to what's changing here. The U.S. dollar is losing at least part of its store of value function, and in turn, gold prices are capturing a part of what the U.S. dollar has lost.
Again, talking about dollar losing market share, which another thing that we've talked about, but let us continue on with this next one here.
I'd say in the latest rally in gold is that this seems to be the first in a long time that seems overwhelmingly tied to Western interests. And that's a key difference, right? Because we think when the East buys gold, that gold essentially is semi-permanently drained. When the West buys gold, and this would include investors, retail participants, and so on, every ounce of gold that is purchased by the West is eventually resold into the market. So that's what characterizes the difference in the latest rally in gold and why we're perhaps a little bit more cautious than prior rallies.
Interesting points he mentions there, and certainly we've seen the ETFs be the dominant trend and changing how it was largely an Eastern driven rally, and we will see when retail in the West starts getting into it. So far, mostly on the institutional level, but either case, we have two more here, so let us pick it up right here.
Ability in and of itself hasn't changed, but what we should be worried about is the sustainability of the current system. Really, what I mean by that is, if you look at the last 20 years, global sovereign debt went from roughly $50 trillion to $155 trillion. The U.S. accounted for the overwhelming majority of that. And I think that in the current administration, the rest of the world is starting to rethink whether their U.S. dollar exposure should remain as high as it is today.
Talking about de-dollarization, whether the rest of the world thinks their U.S. exposure should be as high as it is today, I certainly agree. Again, you're hearing him say it. Although, fortunately, thank you to our Bloomberg host for getting the last question here about silver. And so you hear it right from the source. Here's Daniel Ghali on the LBMA silver inventories.
Silver, we know it's an industrial metal, yada, yada, but a much smaller market than gold. Is it likely to outpace its big brother, do you think?
Yeah, we think this is the end game of what we envisioned for silver. If you recall, Andy, we've spoken about this quite a few times. This is what we saw as the silver squeeze you can buy into, which is really premised by a drain in London vaults, free-floating inventories of silver. We think that drain has now reached a level that is critically low, meaning that at the average pace of ETF inflows over the course of historical cutting cycles, there are probably less than 4 months remaining until the LBMA's entire free-floating inventory stockpile is depleted. That means that the risk of gaps in prices is more elevated, liquidity is critically constrained, and every further drain from current levels should be supportive for prices and at a convex fashion, meaning a faster and faster fashion.
Well, there you have it. You're seeing that happen. That's why we saw that comment that I highlighted in yesterday's show from Robert Gottlieb, former JP Morgan Precious Metals Managing Director. He was saying he thought silver would hit 50, but based on what's happening, and Bob Gottlieb talks a lot about what Daniel writes here. And now he thinks that a $50 mark could be coming even sooner. So there is some news that should probably cheer you up a bit. By the way, on our Arcadia Substack, where we dig into these things quite a bit as well, did have an article here a couple days ago. This was last week. Gold and silver continue to flow into the ETFs. And if you scroll through there, you have gold 2 month, 6 month, and 5 year charts. So here you can really see what's happened since the market started anticipating last year's cuts and then really took off this year as metal was leaving London and coming into the COMEX and going into the ETFs. Charts similar for silver. So again, right there it popped up is how you can get subscribed to the gold and silver daily.substack.com. In another note, was interesting last week in the silver COT, we saw a little bit of short covering at the elevated price, not a lot. And just to put it in context, while all this is happening, here is your gold commitment of traders report. This black line shows how short the banks are, and you can see that we're a little bit off of last year's records, which were set on multiple occasions, but still quite historically short. Similar position with silver. There was the new record set just a couple months ago. We've seen some covering. What are we at here? 43,000 contracts. I believe the high was 54,388. I think that was it. You can look it up and check it, see how close I am. Again, the usual caveat, the banks say that these COMEX shorts are a hedge for their London long holdings, although if that's the case, and you had to subtract that amount of metal out of the free float, then your true available supply would be negative, actually, at least if these were hedged one to one. The latest free float was like about 148 million ounces a week or two ago, below the 250 million ounce average daily turnover in the LBMA. And so, I mean, it's already below what you theoretically need. And if more of that free float is actually unencumbered because it's offset by a COMEX short, that would be why you would see comments like what Daniel said there. And so certainly we will keep an eye on that for you. Here's one we mentioned in the Substack that just wanted to pass along. I don't always talk about this, but Martin Armstrong certainly continues to report a lot of things of concerning trends. And here is Scott Besson, who had a busy couple of weeks. And you see Treasury Secretary says U.S. and European Union must partner to collapse Russian economy. Sounds like what he said was takes on a little different tone than the headline, but we're now in a race between how long can the Ukrainian military hold up versus how long the Russian economy can hold up. And if the U.S. and European Union come in, do more sanctions, secondary tariffs on these countries that buy Russian oil, the Russian economy will be in total collapse, and that will bring President Vladimir Putin to the table. It's a little bit out of my area of expertise, but I'm personally thinking it's a bit unlikely that it will play out quite as he suggested there yet. I think some of the decision makers in the US and Europe feel differently, and they're making the decisions. I'm not. So I don't think it would be a good road to go down. And just concerning that where he went from Trump saying it could end it in a day to now this. So shall leave that there and continue on with a few more because also on the Substack last week, we talked about how Hong Kong was continuing to develop infrastructure to increase the degree to which they're a gold trading hub. And then yesterday, the news, which Vince talked about this morning as well, but China wants central banks to start storing their gold there. So you're seeing these things happen now. I continue to wonder if this is one of those situations where 20 or 30 years from now, I'll be like, oh, yeah, the signs were right there when it was beginning to happen. But I mean, things like this are, and all of these things, why I would suggest, I don't think this will be quite the same as 1980 or 2011, where there was a spike up and then when it went back down, because like Daniel mentioned in his interview, A lot of these things are unresolved, not getting closer to being resolved. Although, fortunately, one thing that has gotten some degree of resolution, you may remember we had Joaquín Marias from Argenta Silver on the show a couple weeks ago, as they have been aggressively moving forward their project in Argentina. And they actually did just get some drill results out this week. And Joaquin checked back in, and I will share what Joaquin had to say about the latest drill results. I am here with Joaquín Marias, who has some great news today. Joaquin, you've joined us a couple of times on the show this year because, in the midst of what I think we can now safely say has turned into a historic silver rally, which I know has people excited. And obviously, a lot of the folks in our audience are also interested in the mining stocks. And you are, of course, running Argenta Silver. So, one of those situations in life, maybe we get a little luck on our side, but you've had some incredible results come out at the same time as the rally. So certainly good news. And you had new results today with some nice step out drilling, also a new exploration target. And perhaps you could just walk us through what the drill came back with here.
Of course, of course. Thank you very much, Chris. I have to say that I love Arcadia Economics and I love the audience that you have. So yes, as you said, we are very pleased to bring these results. We put this news out yesterday, and this is something very important for the company because it's not just a drill hole. This is a step out drill hole. It's a 70-meter step out drill hole. And this one came back, as you were showing, with a 545 grams per ton of silver over 43.2 meters, including 8 meters with 1,302 grams per ton of silver. And as I say, this is very important because it is a step out. It means that we have drilled 70 meters away from the border or from the existing envelope of the existing resource. So it's telling us that the mineralization continues. And we also have disclosed that we have drilled new targets, as you are showing there in the image. We have drilled Atenea and Andrea, and we received results from 2 drill holes from Atenea. And this is very important because it's telling us that there is potentially more in that target. We hit 2 meters with a grade of 314 grams per ton of silver, and this is super encouraging to us because it's telling us that there are some sniffs of silver in the area and that we should pursue that target more. Atenea, it's a new target, and for those who doesn't know, translated into English, that it's called Athena. And Athena, it's a Greek goddess, and we call it Athena because we believe on the goddess of strategy and knowledge and wisdom, and we acquired this target by using those things, by using strategy, knowledge, and some wisdom from our geologists. And this is a new target that has never been drilled, and we finally hit some silver in there, and this is very encouraging. As you can see, drill hole QBD 414, it's located on the upper left side of the resource, or we could say that that's the northwest portion of the resource. And this is a step out 70 meters away from the existing envelope, as I said. And that's telling us that we should just keep drilling on the step out, trying to find more mineralization, the same trend as the resource itself.
Yes, and can you tell us, obviously you've had a couple of rounds of drilling. This is the third one, and perhaps in a moment we can review some of the things that you found out in the first two. But now that you have these results back, where does that leave you, especially as you're incorporating a new target? And also, perhaps for people who might be hearing about Argenta for the first time, can you put in context basically what you have so far and what today's results tell you about how that changes from what you knew last week?
Of course. So let's start by the very beginning. Argenta Silver, it's a very new company. It's recently been born, if you want to call it like that. We started this company in October last year, so it's not even a year for the company. And the company started with a share price of 15 cents and a market cap probably of $15 to $20 million. 11 months after, this is a company that has a market cap of $250 million. Our share price is navigating on $1. I'm always talking in Canadian money. And it's very important to say that our share price has been escalating a lot. This has been a 10x company in terms of market cap. And for all that growth that we have had in these 11 months, we have only spent 6 million Canadian dollars. So we are taking care of every dollar that it's coming into the company. We are being very careful on how we spend that. And we are all the time thinking, how do we get return on investment from every dollar that the investors are bringing in? So Argenta Silver, it's a company that has one project. It's called El Quevar project, located in the north of Argentina, in the province of Salta, which is a super friendly mining province. And our project has 45.3 million ounces of pure silver at a very good grade of 482 grams per ton of pure silver. That's indicated, and on the inferred category, we have 4.1 million ounces of silver at 417 grams per ton of silver. This is a pure silver prospect, and that's very, very rare in the world. We have no zinc, no lead, no copper, no gold in our resource. And as you can see there on the screen, this is a very low tonnage resource. So it means that every time that we drill a little bit and we find more, we can add a lot of ounces into the resource. And what you see on the screen, it's telling you something very interesting. 90% of our resource is indicated and only 10% of our resource it's inferred. So this is a project that has seen a lot of drilling only on the resource, and it's very much de-risked, but there is no exploration outside of the resource from the previous operator. So what we are going to do now is we are going to do a very aggressive exploration plan. We will keep testing the resource. So from now on, the allocation of capital will be 40% into resource expansion. That means keep drilling on the extensions of the resource and trying to add ounces on the resource. So 40% of the allocation of capital will go to resource expansion. And simultaneously, we will be spending 60% of our capital into an aggressive exploration plan. So these two plans these two programs will run parallel. Simultaneously, we can expand the resource and we can try to look for new things and try to find new deposits in the project. So far, we are doing a great job. We hit a good intercept with good grade in this new target that it's called Atenea. And the previous drillings, as you were asking me, Chris, those have been fantastic as well. So this is the previous news release from August 13, what you can see there on the screen. We drilled 40 meters with 1,026 grams per ton of silver, including an all-time breaking record sample of 1 meter with 18,467 grams per ton of silver. This has been fantastic because this drill hole was drilled on a gap of 60 meters diameter. And that literally gap or void that we had on the resource has been filled by this drill hole. And it's telling us that those gaps that we see on the resource are actually drilling gaps and not mineralization gaps. So it means that we need to drill more of these gaps in order to get fill those areas, to fill those portions of the resource. And we need to step out more, so we start building up more ounces from there. If you show the long section with the other results, you can see as well the previous results. I think that is the one that you have far on your right, that one there. So this one here is showing you the previous results that we have disclosed. So we drill in total 16 drill holes. The program, it's over. This program is over. We drill 4,244 meters, and we will now jump into a larger season. The results that you see on the screen are two previous news releases that we put out. One was in July and the other one was in August. And here you can see on the very far left side of the screen, a step out for the drill hole QVD 408. That was a 50-meter step out that came back with really good grades. We drilled 19 meters with 112 grams per ton of silver. Great grades inside there. This is telling us that the deposit might be extended to the left. And then we drill that gap that I was talking about before, which is QVD 412, that came with those 40 meters of 1 kilogram. And that also came back with an all-time record-breaking result. But now what we are disclosing, and that's why we are doing this interview, is because we have drilled on the far right of this image. So on the far right side of this image, we drilled that step out. And this is the step out that we are posting now with a 545 grams per ton of silver over 40 meters. It's telling us that the deposit might continue down plunge. So we are very excited, Chris. I have to tell you that this is giving us a lot of ideas, because our deposit, those 50 million ounces combined that we have on the resource, are in one place. They are not distributed all over the map. And if we could extend this deposit and we could build it up, let's say to double the existing resource, then we would have a huge amount of silver only in one place to start mining in the future. And as I said, we want to invest 40% now on resource expansion and 60% on new discoveries.
Well, Joaquin, I say congratulations to you. Obviously, we've talked a couple times now this year, and you've had some great results. I know last time you had just gotten the results. You were on your way flying down to Argentina to be in the project, and I hope you had a good time there. And I'm sure it'll be exciting the next time you go down because, like I said, I mean, obviously you have to prepare for the price of the metal is going to do what the price of the metal does, but certainly the combination that it is during what is quite an interesting rally, and I might add, even the banks now are starting to talk about issues with the silver supply. So the timing is great, and it's really fantastic to hear this news. And Joaquin, perhaps just could you let people know if they have questions, would like to sit down, talk with management, find out more about what you're doing, just what's the best way for people to reach out and get in touch?
Yes, of course. If you have some questions, please write to us. Our VP of Investor Relations and Communications is Vanessa Bogaert. I think that you can find her contact somewhere there, but it's actually on the last page of our presentation. You will find her contacts at the very back of our presentation, but as well you will find my contact there. So please reach out to me. Vanessa Bogaert's email, it's a vv at argentasilver.com, as you can see there on the screen. And my email is jm@argentasilver.com. So please feel free to contact us. We will be pleased to show you more about this project. I want to remember that we are on the OTC for the American market under the ticker AGAGF. If you want to trade in Canada, that would be AGAG only. As it is saying, this is a pure silver play. It's the third largest undeveloped silver project of Argentina. This is extremely rare. As you can see, our share price has been climbing up since we created this company. We are supported by very big people in the industry, Frank Justra and Eduardo Elstein. Frank Justra, it's a mining legend. And Eduardo Elstein, he's one of the biggest real estate owners in Argentina, a very big agribusinessman of Argentina. And he has always been investing in the mining industry. So he knows a lot about this. So we have local support in Argentina. And I think that the market is also helping us a lot at this moment. The price of metals are looking great. And well, you can see there our share price, how it has been behaving, right?
Yeah, certainly quite a start to the company. And, again, but on the one hand, I think investors also grasp that the share price does what it does, yet obviously that part's good, but even more important is that what you've been doing behind it, including the latest results that came out today. So I will have the link to this press release in the description field below, as well as the email addresses for Joaquin and Vanessa, who is great to talk with as well. So, Joaquin, congratulations. When are you headed back down to the location?
Well, at this moment I'm in Vancouver. I live here in Canada, and I think that I will be going down south probably in the next month or so. You caught me last time at the airport. I remember that we were talking there with some people in the back. Now I'm in my office, working a lot with these results and having a lot of interest from the market. We have all the leverage from silver. This is a pure silver play, and that's why we are getting so much leverage from the silver prices. And I hope to be in Argentina very soon. I hope that some more news are coming out. As I said, there are 6 drill holes pending results, Chris. So you will see more results coming in between early October and late October. So please stay tuned because more results will be coming very, very soon.
Yeah, and also by then you'll be starting up what I guess that will be the summer season of the drilling program that starts in October, reverse
Yeah,
there from our
yeah,
North
yeah.
American patterns here. But anyway, Joaquin, we'll look forward to following that. And thank you so much for the update. And we'll check back in with you again soon.
Thanks to you. Talk to you soon. Thank you.